Now, we've seen a reminder of the global uncertainty in the World Bank figures, which show that global growth is slowing considerably and the risks are tilted to the downside. And in the national accounts figures today as well, of course. The rise in interest rates is clearly biting. We see that in the numbers because households are pulling back on spending, they're saving less and they're paying more in interest. Household consumption eased for the third quarter in a row. It grew by just 0.2% in the quarter, and that's because households pulled back on discretionary spending to make room for the essentials in their household budget. The saving ratio fell to 3.7%, and that's the lowest since 2008. Mortgage interest expenses have doubled over the course of the last year, and dwelling investment and activity in the housing market declined in the quarter as well. And those are all of the indicators which show the impact of higher interest rates as well as these cost of living pressures more broadly, squeezing household budgets and weighing on economic growth in the economy more broadly. And with so many Australians under the pump, one of the pleasing aspects of these numbers is that household incomes grew solidly in the quarter at the same time as price pressures in the economy were moderating. If you look at the wages and salaries number, it rose by 2.4% in the quarter and 10.8% over the year, and that's because more Australians are in jobs and earning more. This is the fastest growth since the June quarter of 2007. Disposable incomes also rose, which helped to offset some of the pressure on household budgets, which are still nonetheless considerable. The data also confirms a view that we've had for some time, which is inflation is moderating from its peak. Not as fast as we would like, and it will hang around for higher than we'd like, for longer than we'd like, but there is more evidence in this data today that inflation is moderating from its peak of around Christmas time. The National Accounts measure of consumer prices rose by 6.5% over the year to March. That's down from 6.9% over the year to December. Obviously, we want these price pressures to moderate quicker than that, but we are seeing more evidence in these numbers that prices are moderating since their peak at the end of last year. We're also seeing some really welcome signs that business investment is picking up as the impacts of global supply shocks recede as well. New business investment grew 2.9% in the quarter. That's partly a consequence of the easing of some of these supply chain pressures, which have meant that more businesses have been able to get more capital in place in their businesses. We also saw some significant activity in renewable and electricity projects on the East Coast, something that we support and we welcome. And while we've seen commodity prices come off a little bit, we are still getting really good prices for the things that we sell the rest of the world. You can see that in the numbers. So we knew that this was going to be a difficult year, given the challenges coming at us from abroad and here at home as well. And today's result really confirms those two things, that people are under pressure and the global economic conditions are not helping either.